Hello, and thank you for watching us here at XM.com. I'm Cristina Marucos, and I'm joined by Rafi Boyajian, Senior Investment Analyst, and we'll be looking at the weekly outlook. Now, it's been a pretty bad week for risk sentiment, considering that President Trump has been ratcheting up trade tensions not only with China, but with Mexico as well, something that has generated strong demand for safe havens and pulling away funds from riskier assets. However, the Australian dollar appears to be steady against the US dollar. Now, is there something coming up this week that can change that?
Well, potentially, yes. We do have a policy meeting by the Reserve Bank of Australia on Tuesday. They are widely expected to cut interest rates by 1/4 percentage points. That would make it their first rate cut in 3 years. However, this has already been mostly priced in by the markets. So whether or not the Aussie comes under pressure next week will depend on what the RBA will signal about additional rate cuts beyond the one we're expecting next week. We also going to have first quarter growth numbers a day later for Australia. Again, if we do see some unexpected weakness there, that would only fuel expectations of more rate cuts to come by the RBA later this year.
Now, apart from the yen and the franc, the US dollar has also attracted plenty of safety flows, even as we saw US yields tumbling to multi-year lows. So this coming week is set to be a quite busy one for the greenback. What are the highlights?
We're going to have plenty of data coming out of the US. Plus, there's going to be a Fed event in Chicago on June the 4th and 5th, where many Fed officials will be speaking, including Fed Chairman Jerome Powell. And given what's happening in the markets, what's happening with trade tensions, his remarks, of course, will be very closely watched. In terms of data, though, we can expect some positives. The ISM manufacturing, non-manufacturing PMIs, both due next week, are forecast to show an improvement in economic activity for the month of May. On the other hand, the all-important non-farm payrolls due on Friday. Although we're expecting a healthy report, wage growth is expected to remain unchanged for the month at 3.2%. That wouldn't be enough to drive inflation higher, so it wouldn't do the current rate cut bets that we're seeing for the Fed any favors. So that potentially could have some negative impact on the US dollar. Although for the past week, lower yields haven't really done much to drive the dollar lower because it's been helped by safe haven demand.
Well, appears to be a very busy week for the dollar. Yes. Remains to be seen. Now let's move into the euro. It hasn't been doing well lately. Actually, it's on track for weekly losses of more than 0.5%. Now, can we expect something this week to change that maybe?
Well, it's not looking too good for the euro. We do have flash inflation numbers coming up early in the week, which we're expecting to see some moderation in Eurozone inflation. And then we're going to have the ECB policy meeting next Thursday. The ECB will be publishing its latest economic projections. If we do see downward revisions to the central bank's forecasts for growth and inflation, that could potentially signal some policy easing later in the year. For the current meeting, though, the ECB is expected to keep its policy unchanged, and all eyes will be on what Mario Draghi, ECB president, will tell reporters about the current situation in the Eurozone, which it's basically the gloom is prevailing still over the Eurozone outlook, well, not just economically, but political worries as well, and that's been weighing on the single currency.
And now let's move into the pound. It's been a tough week for the currency. In fact, May was cable's worst month in a year. So why is the pound struggling so much lately? And is there any possibility in the future for that to change? And what should we be on the lookout for?
Well, we've got renewed concerns about a no-deal Brexit. Ever since Theresa May announced her resignation, it's looking very likely that her replacement will be a hardline Brexiteer and will push for a no-deal Brexit if the EU doesn't renegotiate the withdrawal agreement. So that's been very negative for sterling. We do, though, we'll have some PMI numbers coming out of the UK, the manufacturing and services PMIs, which are seen as a good indicator of the UK economy. But at best, they're expected to provide only some short-term direction for the pound.
Rafi Boyajian, thank you so much for joining me today. And thank you for watching us here at XM.com.